Hey, hello, good afternoon. This is Jack Tubbs from the J Team at Realty One in Surprise, Arizona, coming to you on this beautiful day here in the Valley of the Sun in Phoenix, Arizona. Hey, want to talk to the buyers out there today. There's a few things that you need to know as you're thinking about getting ready to buy, or maybe even thinking about ready to sell and buy. There's some things that we have to take in consideration because, according to a recent survey, there's some things that some buyers really aren't, 25% of the buyers to be exact, really don't know, or they're underestimating. Number one, 25% of most of the buyers out there seem to underestimate their buying power, and sometimes as much as $150,000 of what they can afford to buy. Now, I know some of you are saying, well, I've got my set amount. I don't want to go above that because I got an idea what the payment's going to be. And I understand that. But in this crazy market, you may have to stretch just a little bit more than what you might have a few years ago to be able to get the house that fits your needs the best, that meets your criteria more exacting. Secondly, 25% of most buyers really don't know or have misjudged what the appreciation on their current home is and what kind of appreciation they're going to get on the new home by as much as $100,000. And lastly, almost 50% of buyers right now, according to this survey, don't really know what a good interest rate is. And I can understand where some people might miss that because they go to the institution they've been banking with for years. And sometimes I do advise that because they've got all your financial records. And if you've got a credit card with them, they've even got a better idea of what your payment history is and what your credit score is. And that helps them make a decision that much quicker on helping you purchase your next home, on giving you your next mortgage. But we've got to get out there and look, because there are some lenders out there that if your credit score meets their criteria and your debt to income ratio meets their criteria, they have interest rates that will below 3%. Sometimes they're depending on what you do, you might even get below 2.9% interest rate. And that is just a fantastic, once again, historically low interest rate. So those are a couple of things you need to know. But number one, you need to know about down payments. And I talked about that just a couple of broadcasts ago. Knowing that you don't need 20% can be one of those things that lifts a ton of weight off your shoulders and lets you breathe a little bit more easily, because a lot of people are concerned that they not only have to have that 20% down, but then they've got to have all their closing costs on top of that. Now remember, if you're a veteran, all VA loans are zero down products. You pay a funding fee, and that's going to vary from lender to lender, but there's definitely a funding fee, but it's a zero down product, and there will be closing costs included in your transaction. But know that's probably going to be much cheaper than even having to come up with even 3.5% down payment, which is offered by almost all FHA loans. Also, we have some conventional loan products out there are as little as 5%. I've seen some of them go cheaper, but they don't save you from your private mortgage insurance, which will be another additional monthly cost until you have 20% equity in your home. So those things you have to weigh the cost. You're definitely going to have to understand exactly how the program works. But know that there are zero down programs out there or low down payment programs there, especially like rural development. If you're going to live in a more rural area, this is a program that's run by the United States Department of Agriculture. They have very favorable interest rates and lower down payments. So having 20% is not necessarily the down payment you need. And number two, I already talked about this at the beginning. You probably can afford more home than you think. You got to make sure that you sit down with a good lender so they can review all of your finances, look at your payment history, look at your debt to income ratio, look at your credit history, and find out exactly how much you can borrow. And sometimes if you have a spouse or somebody who lives in the home who is earning income, sometimes their income can be added on, and that will increase your buying power. Number three, you're going to have to know that home ownership affordability is probably as cheap as it's going to get right now, because we see the crazy market that's going on here as we continually to experience historically low inventory on already existing homes. Prices are going to continue to go up. Also, until builders get everything set back again with a supply line for their supplies, they're starting to come down now, and the availability is starting to come up a little bit. You're still going to find that their prices are going to remain high because they can only build so many homes with the inventory that are the products that are available to them right now to build your home. And also they're going to be higher because definitely lumber, etc. Lumber has gone up over 26% during the COVID crisis. Now that things are beginning to change and we're seeing production ramp up and lumber becoming more readily available, and also finishing products such as appliances and flooring and all these other things that it takes to finish a home, they're becoming more readily available. So builders are going to be actually cranking up their production somewhat, and we're going to see their available homes or their available spec home inventory probably jump by quite a bit too. But until we're there, it doesn't seem to really matter, because we have historically low inventory and we have historically low interest rates, and those two together just are going to be going to continue to feed the increase in price, the increase in value, month over month, year over year. But realize that you're going to be the benefactor of that if you buy now, because home ownership is going to only continue to get more expensive, because as the prices go up, so are going to be closing costs, etc., and payments. So these are 3 things that you really need to know, that you know what, you probably can afford more than you can think, than you know, that home ownership is not going to get any cheaper. It's only going to continue to get more expensive over time. And like I said, it's because of our historically low interest rates. And then lastly, you don't need to have that 20% down payment. There are so many different programs out there, both conventional, FHA, rural development, MBA, where you can get in a home for a lot less than 20% down. And depending on how your agent helps you write the offer, you may be able to get some of your closing costs covered in the transaction too, if the seller's open to it, or if the property appraises at what the offer's written at. So there's a whole bunch of different factors out there that you need to know about. And if I can answer any of those questions, please feel free to reach out to me. You can dial me direct at 248-330-7972. That's 248-330-7972. Or you can email me, Jack, that's Jack, at the J Team, and that's THE, the letter J, the word team, .house. And remember, it's not .com or .org, but .house. So it's Jack at the JTeam.house. Or you can call the office, talk to any of my team members. They would be more than happy to help you. And you can dial them at 623-252-4061. That's 623-252-4061. Hey, this is Jack Tubbs with the J Team, wishing you a happy Thursday, and I'll be back with you tomorrow to talk a little bit more about what's going on in the Phoenix real estate market.